Hey guys, welcome to another Damilola Forex Academy video. In this video, I'm going to be teaching you all how to read the Forex markets like a pro with a very simple step-by-step approach. So I want you all to grab your pen, grab your book, and sit while I take you through this beautiful process of reading the Forex markets like a pro. Let's go, guys. Okay, in reading the markets like a pro, it's important that you start from the biggest time frame available to us on the market. And it's important that you also follow a stepwise process. That is, from the monthly time frame, you go to the weekly, to the daily, 4 hours, 1 hour, 30 minutes time frame. It's important you follow a coordinated sequence. Okay, don't skip any time frame at all, apart from the smallest time frames that I don't even go to at all. That is the 15 minutes, 5 minutes, and 1 minute. And that is because any structure that I see on the lowest time frame that I trade on, which is the 30 minutes, any structure on the 30 minutes is more concrete than the 15, 5, and 1 minute time frame. Okay, so it's important that what you follow a coordinated step. Okay, no matter what pair you are trading. For example, this is the Euro USD pair, and that is what I'm going to be using for today's analysis. Okay, so the first thing we do, you all should be familiar with this right now if you follow my recordings, is that what? We identify the pinpoint area where prices is. Okay, so as soon as we identify the pinpoint area, the next thing we want to understand is what? What is the story that took prices to that point? Okay, so I'm going to be taking it, like I said, step by step, so we all can understand in a stepwise process how to be able to read the markets. Okay, so as soon as what we identify the current area where prices is at, the next thing is what? We draw out the structures that took prices to that point. What are the structures? What are the stories that took prices to that point? Okay, so let's go ahead and analyze the structures and the stories that took prices to that point. Okay, so we can see prices make a push, exhaustion, push, exhaustion. Prices continued by making a push, exhaustion, and made a push, exhaustion, and a push. Without any iota of doubt, we know that prices is bearish. Of course, we know that what the lower high and lower lows forms the bearish coordination. So without any doubt, prices is clearly bearish, as we can see on the monthly time frame. Okay, so the structure that brought prices to the real-time point where it currently is bearish structures of lower highs and lower lows. This means that there's a probability that at any point prices will catch a lower high and continue on consecutive lower highs and lower lows. Okay, so the next thing we are going to do is that what we are going to identify the point where prices is currently at and see if there is a reversal area around that point. Okay, so I will bring my Fibonacci from the high to the low right here. Okay, and we can see prices around the 61.8 at this point. Okay, and we all know that what 61.8 Fibonacci is a potential reversal area of prices. This means that what when prices came from the lower low and when prices came to the 61.8, this 61.8 can serve as a resistance that is going to trigger the break of the bullish structure that brought prices down to the 61.8 and which will trigger a sell for the continuation of the bearish structure. Okay, so clearly we can see prices rejecting at the 61.8. Let me take the annotations out so we can see prices clearly rejecting at the 61.8, which we already know that 61.8 is a what? Is a key reversal area. Okay, so we are going to take the bullish structure, this bullish structure here, okay, this bullish push to 61.8, we are going to take it to the weekly time frame and we'll look for what? A break of that bullish push. The idea is when the break of the bullish push happens, we will be able to sell to 100.0 of the broken fractal. Since if we are selling the direction of trend. Okay, so now that that is done, what are we going to do? We'll go down to the weekly time frame to look for a break of the bullish structure. Okay, so this is the daily time frame. Now, what is the structure? We can read the structures right here as push, exhaustion, push, exhaustion. We can see a clear break of structure right here, then push, exhaustion. Okay, push to break structure. So now this means that what? Prices has broken all of this bullish structure. Okay, so that means that what? That 61.8 actually acted as a reversal area by triggering a break of structure. This means that what? If we are selling, we are going to sell to what? To this ground level right here. This is the eventual level where price is getting to. Okay, but this is the weekly time frame, and we don't pick trades on the weekly time frame. Our entry time frames is the 1 hour and the 30 minutes. Okay, but eventually we've seen a clear break of structure, and we know that long-term prices is coming in. Of course, we understand the rules that what? After a break of structure, about 80 to 90% of the times, prices always goes back for a natural 61-point retracement. In this case, prices wants to go and catch more bears. Okay, and it is this more bears that price wants to catch that will send prices down to the 100.0 of the broken fractal right here. Okay, so now we said that what prices goes back for a natural 61-point retracement. Okay, so now let's bring out our Fibonacci and see if prices has gone back for a natural 61-point retracement. So I bring Fibonacci from the high to the low right here. Okay, so I can see prices rejecting 61.8. Okay, prices even traded above 61.8 only to correct itself back, and we can see a rejection. Okay, like I said, eventually we know that prices is coming to this ground level here. Okay, prices only went to the 61.8 to grab more bears. Okay, so what are we going to do? We are going to look for what? A break of this bullish structure that took prices to 61.8 here. We're going to take this bullish structure to the daily time frame and look for a break of the bullish structure. If the break of the bullish structure happens, we know we are selling to this level as TP1, then we're eventually selling to this ground level as TP2. So we're going to take that bullish structure down to, we're going to take the bullish structure down to the daily time frame to look for a break of the bullish structure. Okay, of course, we know that what? If we are selling what? In the direction of trend. That is what the rules of selling in the direction of trend or buying in the direction of trend is that what? Take profit at the 100.0 Fibonacci of the broken fractal, while the rule of trading a retracement is that what? Take profit at maximum the 61.8 Fibonacci of the broken fractal. Okay, so now this is the bullish structure right here. So let's go ahead and read the structures together. So we can see prices make push, exhaustion, push, exhaustion, push, exhaustion, okay, and push. So we can see prices went from small fractals to big fractals. Of course, if you've been following my trading, you would know that what? I trade within the confines of each fractals. I don't go beyond fractals, and I trade within the confines of fractals. And we all know that the rules of fractals says that small to big fractals can be traded together. That is, if prices goes from a small to a big fractal, they can be traded together, while a big to a small fractal must be separated and traded separately. Okay, so here we can see prices start on smaller fractals, then prices establish the bigger fractals. Okay, so what are fractals? Fractals are the length of the exhaustion. Fractals are never about the push, but instead they are about the exhaustion. Okay, and fractals are measured in pips. Okay, they are measured in pips. That is, they are measured by what? The length of the exhaustion. So right here, we can see a clear break of structure here. So when the clear break of structure happened, we know that what? Prices will go to the 100.0 of the broken fractal at this point. Okay, this is our eventual take profit. But of course, we know that what? When a break of structure happens, prices usually goes back to 61.8 to grab more bears in this case before heading straight to take profit. Okay, so we're going to bring out our Fibonacci and identify if prices has gotten to the 61.8 of the broken fractal. Okay, so we'll bring the Fibonacci out from the high to the low right here. This is the low right here, and we can see that what? Prices has actually gotten to the 61.8, and like I said, 61.8 acts as a key reversal area. So we know that at 61.8 prices can catch a resistance, and that resistance can send prices to break the bullish structure that brought prices to that 61.8, and that will eventually send prices crashing to this level. So what we are going to do next is that what? We are going to take this bullish movement, this high and this high. We are going to look for what? A break of that bullish structure, and at a break of the bullish structure, we know that we'll sell to 100.0 of the broken fractal, then eventually sell to this ground level here. Okay, so let's take that bullish structure on this time frame. Okay, so what is the bullish structure? We can see prices make push, exhaustion, push. Okay, so this is the last higher low right here, and we can see a clear break of the structure. So a clear break of the structure has happened. So within the confines of these small fractals, this is take profit one. But eventually we know that all of these movements are retracements and prices is coming down to this level. Okay, but within the confines of that small fractals, when prices broke structure, prices went back again for a retracement. We always know that what at a break of structure, prices goes back for a 61-point retracement. So let's bring the Fibonacci again to see if prices went back for a 61-point retracement. So we'll bring Fibonacci from the high to the low. Okay, so clearly we can see that what when prices broke the structure, what did prices do? Prices went back again for a 61-point retracement. Okay, so now this 61-point retracement is now what is going to act as a resistance, and that resistance is what is going to send prices down below eventually. Okay, so what we are going to do is that what we are going to take prices in bits, okay, and what we are going to take this resistance and this support, we are going to take them to a smaller time frame, to the 4 hours time frame, and look for a break of that bullish structure. Okay, so when we see a break of the bullish structure, we are going to sell to the 100.0 of the broken fractal. Of course, we can see that price has already gotten lower, but let's just go to the 4 hours time frame to read the structures better. Okay, so this is the structure on the 4 hours time frame. This is the high that we identified, and this is the low right here. Okay, so let's identify the structures together. We saw price start on small fractals, push, exhaustion, then price made push, exhaustion, push, then prices broke structure clearly right here. Okay, so when prices broke structure, we know that what prices will come to the 100.0 of the broken fractal as at this point. Then eventually prices will keep going down. Okay, because the eventual place that prices will get to is this support right here, because at the end of the day, we realize that all of these movements were only exhaustions, but prices will eventually come here. But what we are going to do is that what, as smart traders, we are going to make money on the sell and on the buy. We are going to sell direction, we are going to buy retracement. Sell direction, buy retracement, sell direction, buy retracement. This is because what prices moves in wave patterns. Okay, these are the wave movement of prices. Prices does not move straight like this, it moves in wave pattern. So we are going to take advantage of the wave movements opportunities. That is, we are going to sell direction and we are going to buy the retracement. Okay, so now on the 4 hours time frame where we went to, we saw the wave movements. Okay, first of all, this was the clear break of structure right here, which was going to send prices down to the 100.0 of the broken fractal. This is the 100.0 of the broken fractal right here. Then eventually when prices got here, prices continued thrusting downwards. Okay, so like I said, my job is to make money selling direction and buying retracement. Okay, so what we are going to do is that what we are going to take this high right here and take this low right here. We are going to take it to the 1 hour time frame to see if there's a real-time trading opportunity for us. Okay, so we are going to take that to the 1 hour time frame to look for a real-time trading opportunity. Okay, so this is the high right here, and this is the low right here. Okay, so what is the structure? The structure is push, exhaustion, push, exhaustion, push, exhaustion, push. This is where the clear break of structure happened at this point. So right here we can see a clear break of structure. Of course, we know that what if we are buying to 61.8, because what the break of structure is a break of a bearish structure. This means that what if we are buying a retracement. That means the maximum we can buy to is the 61.8 of the broken fractal. Okay, so now we are going to bring our Fibonacci from the highest point of the broken fractal, which is right here, to the lowest point of the broken fractal, which is right here. Okay, let me take the annotations out so we can see it clearly. This is the lowest point of the broken fractal here. This is it. Then this is the highest point of the broken fractal. Okay, so we know that what our take profit for this trade, we've seen a clear break of structure. So we know our take profit for this trade is the 61.8, which is a retracement. Okay, why is it a retracement? This is because what the monthly, weekly, and daily are bearish. Okay, if the monthly, weekly, and daily time frames are bearish, and on the 1 hour time frame or on the 30 minutes time frame you see a buy trade, this means that the buy is a retracement. While on the 1 hour or on the 30 minutes time frame, if you see a sell trade, when all the big time frames are bearish, this means you are selling the direction of trend. And like I said, our job is to make money on both selling the retracements and selling the direction, okay, or buying the retracements or buying the direction. Either ways we are supposed to make money on all of those areas. Okay, so now what are the structures? The structures are push, exhaustion, push, exhaustion, push, exhaustion. Okay, this is the lower eye right here. Then prices came down to this point, and what prices broke structure as at this point. Okay, so when prices broke structure, we can be able to enter our trade using what entry variation 1 by putting our entry right at this point, then putting our stop loss at this point and buying to the 61.8 of the broken fractal at this point. Okay, so there are other ways to enter the trade also, but first of all, let's calculate the risk reward. Entering here, my entry is going to be here at the break of structure with my stop loss at this low of about 64 pips. And I'm going to be buying for about 100 pips. This is just about 1:1.5 risk reward. Okay, so now there are other ways to be able to capitalize on this trade, on this same opportunity, which is what we know that okay, first of all, let's identify this 61.8 out as take profit. Okay, first of all, we know that when a break of structure happens, prices usually goes for a natural 61-point retracement before heading to take profit. Okay, so this was where the break of structure happened. Then we can see prices came back for a natural 61-point retracement. So in this case, we can also enter this trade using entry variation 2. Okay, what does entry variation 2 entail? Entry variation 2 entails that when a break of structure happens, allow prices to come back to 61.8, then buy pinpoint at 61.8 and put your stop loss at low, then buy to take profits. In this case, since we are trading a retracement, then our take profit is at the other 61 points of the broken fractal. Okay, so using entry variation 2, what are we going to do? We are going to buy pinpoint at 61.8 and put our stop loss at the low for about 32 pips, then buy for about 143 pips. Okay, this is about a 1:4 or 1:5 risk reward. So you can see that with this same opportunity, okay, we can either be able to enter the trade using entry variation 1, which is just going to give us a 1:1 plus risk reward, or just have a little more patience and allow prices to come back to 61.8 to give you entry variation 2 opportunity. That is buy pinpoint at 61.8, put your stop loss at the low, then ride from the 61 points straight to take profits. And on this same opportunity, you would have seen a 1:4 or a 1:5 risk reward using entry variation 2. So these are the advantages of understanding our various entries and being able to take advantage of them with a simple understanding. So clearly we can see that if you bought at 61.8, you would clearly be soaking in profits already. Okay, let's see how many pips you'll be currently in. You'll be in 52 pips profits with the stop loss of about 30 pips. Okay, so you would be close to a 1:2 risk reward, while you are going to as much as 1:4 plus or 1:5 risk reward on this particular trade. Okay, so this is how to be able to take advantage of prices. Just do a stepwise breakdown from the monthly, weekly, daily, 4 hours. Do a stepwise breakdown, then pick your entries only on the 1 hour and the 30 minutes time frame. Okay, and all entries are backed by a break of structure. There must be a break of structure. That is the only indication of an entry for us. So when the break of structure happens, you can enter using different variations of entry. But the variations of entry I'm going to be talking about right now are entry variation 1 and entry variation 2. That is entry variation 1, enter pinpoint at the break of structure. Or entry variation 2, allow prices to come back to 61.8 and enter pinpoint at 61.8 and ride the trade to the take profit at the other 61.8, since we are trading a retracement. Okay, so this is how to go about understanding and reading the markets perfectly. Trust me, if you understand and read the markets like this, you are not going to have any issues at all. You are going to do fantastic if you continue reading the markets in this simple way of trading. Okay, guys, I have a very great news for everyone. Due to popular demand, I have decided to launch my bootcamp 2.0, which is going to start on the 10th of May to the 12th of May 2024. Okay, so my aim is during this bootcamp, I'm going to be holding you by the hand through very, very important areas. Bootcamp 1.0 was very successful with over 90% success rate. Bootcamp 2.0, I assure you, is going to do even better. Okay, because I've outlined a lot of the very important areas that a lot of traders don't understand, or these are areas that are still holding a lot of traders down. Okay, so it cuts across different aspects of price action, very, very key aspects of price action. Bootcamp 2.0 is going to be more detailed, okay, because from the feedback with Bootcamp 1.0, I've been able to add so much positive things into Bootcamp 2.0 that are going to help you scale even faster and become even much more profitable in a shorter time. So it's going to cut across multiple aspects of multi-time frame analysis, teaching you various parts of it, trend following, the golden time frame for perfect trade execution, so many important parts of it. The ultimate price action trading system. I'm going to be explaining my trading system in bits, taking it in the minimum term, taking it very simple and making it very comprehensive for everyone. I'm also going to be talking about psychology, because psychology holds traders down, and I'm going to be breaking several important parts of psychology for you all that are going to help you scale into profitability. I did it in Bootcamp 1.0, Bootcamp 2.0. I'm going to do it even bigger. So link in the description below, and looking forward to see you in the bootcamp.